What's up, strategic investors? We're here to bring you breaking news regarding cryptocurrency and macroeconomics in a simple way that's easy to understand. This is one of the most volatile periods of history in the last several hundred years. Economics and cryptocurrency has never in history been as important to understand as it is today. We're looking to build a community of some of the brightest minds in all of finance. Asset management is like a game of chess, and we're always looking to stay one move ahead of the competition. Subscribe to our channel to become a part of the most comprehensive upcoming communities in cryptocurrency and economics. So enough with that, let's get to the content you all came here to see. In this video, we're going to be talking about the top 20 economies with the largest trade surpluses. We're going to compare several different data points regarding these top 20 economies with the largest trade surpluses. And then we're going to try to decide which of them would be best to try to allocate capital to for investment. So you can see this is the list of the top 20 that we're going to be looking at today. Keep in mind that there are some pretty interesting countries that don't show up on this list that might also be worth a look at also, such as India. But for this specific video, we're just going to be looking at these 20 countries, and we're going to be comparing them with their ranks in trade surplus, foreign exchange reserves, and real GDP growth rate. And the reason we chose these three metrics to look at specifically at this point in time is because we think we might be entering into a period where we might have a strong dollar environment. So if there's a strong demand for dollars overseas in the euro-dollar market, if you have a large trade surplus, that means you're bringing in a lot of US dollars into the country through trade. So if there's a shortage of dollars around the world, this would be one way that the countries on this list would be able to support that need for dollars. And then also, if you take into consideration foreign exchange reserves, so these countries have the highest foreign exchange reserves. So if there is a high demand for dollars, all of the countries on this list should have enough US dollars to at least weather the storm more than the rest of the countries. And of course, we do want to see a country that is supporting strong growth going forward. So I think these three metrics right here make a pretty well-balanced and quick view of where might be the best place to actually allocate money in a situation like we find ourselves in today. So you guys have seen the links here, so I'm just going to minus this out. All right, so I put together a spreadsheet of all of that data, so it's a lot easier to look at. So you can see that it's basically just the three sites that we looked at and then the average rank among each of the metrics that we looked at. So you can see that up until column E over here is the trade surplus site that we looked at and the data that was on there. And then from column F to G is the foreign exchange reserves that we looked at. And then from column H to column I is the real GDP growth rate that we looked at. And then column K is going to be the average rank of each. So you can see that Germany has the highest trade surplus in the world, and Japan is second, and China is third. So if we use that same concept regarding these other columns, such as the foreign exchange reserves, you can see that Germany is ranked 12, Japan is ranked second, China is ranked first, Netherlands is ranked 41st. And the same concept is applied to the real GDP growth rate. So basically what we did is we can look at the math really quick. We just added up those three columns and divided by 3 to get the average. So let's sort this by the average rankings of those three metrics. All right, so now you can see that we have sorted this data by the top averages of those three data sets that we were looking at. So you can see that China has the highest average rank of their trade surplus, foreign exchange reserves, and real GDP growth rate. And you can see that Taiwan is second, South Korea is third, Switzerland's fourth, Russia's fifth, Norway is sixth, Israel is seventh, Japan is eighth, Germany is ninth, and Denmark is 10th. I do also want to point out that there is another metric that should be considered, and that is political risk. Because 3 of the top 5 have considerable risk when it comes to politics. So China, Taiwan, and Russia are obviously an area in the world that could pose political risks to the capital that you have allocated in those countries. And actually a perfect example would be with Russia. With the sanctions that the United States placed on Russia after the invasion of Ukraine, That means that Russia can no longer finance its debt through Western countries. And this is actually a big reason that Russia had a major sell-off. I believe it actually sold off 45% in a single day, which I believe was the largest sell-off in all of Russian history. So although Russia does rank pretty high on this list, you can see that there can be black swan events that pose major risk to the capital that you have allocated in the country. So I think that is definitely something that needs to be taken into consideration when looking at China, Taiwan, and Russia. So if you subtract China, Taiwan, and Russia from the equation, that would leave South Korea, Switzerland, Norway, Israel, and Japan as the top 5 countries that would possibly be worth looking into allocating capital to. And as we mentioned, there are other countries that did not make the list that we were looking at that definitely could be worth looking into also. I think India probably has some potential at some point in the future. So this list isn't all-inclusive, but I just thought it was a good way to kind of navigate through the noise and just see what is really worth paying attention to at the moment. So I think that's a good place to wrap up the video. Alright everyone, thanks for watching. We hope you all found this content valuable. If you did, like this video to let us know so we can continue to put out similar content. If you have any questions or comments, or if you have any suggestions regarding other topics you're focused on and would like to see us cover, just let us know in the comments below. And subscribe to our channel to become a part of the most comprehensive upcoming communities on all of YouTube. This economic environment only comes around once in a lifetime, and we're here to act like it. We're not here to talk you up. We're going to leave our emotions at the door and navigate these markets through the good and the bad. Keep in mind that this is not financial advice. This is more of a mastermind that we can all come together as a community and use each other's unique perspectives to better achieve logical conclusions. We really appreciate all of our team out there watching, and we look forward to continuing conquering these markets with y'all going forward. Until next time, stay one move ahead. Have a great day, everyone.